Hello traders, Gary Wagner here. Just about 10:30 in Honolulu, 4:30 in New York on Friday. Happy Aloha Friday, as we say on the islands. May 20th, 2016, and this is the Daily Report for Gold and Silver, our weekend review in which we combine it with trending markets. Gold under extreme pressure along with the entire precious metals complex throughout the latter part of the week. Big sell-off yesterday. Today, not so much. Off about $1.70 on the day. $12.53 and change. Low on the day, about 49, $12.49 with a high of $12.61. And closing in essence in the unchanged area to down a couple dollars on the day. Absolutely no doubt. This week we witnessed gold prices on a technical basis absolutely breaking through what we identified as a current level of support, and it was a critical level that I believe should have held. That would be this area between about 1260 and 1258. It's this dashed line that comes in right here. It is a 61% retracement from the onset of the former rally, which began roughly at 1228 and concluded roughly at 1306. When we do that, our 61% retracement, which would be a logical retracement for the market and still put it on a bull track, so to speak. In other words, the market can rally, correct 61%, and then move back towards the upside, because that had been the prominent direction of this market over this last year, when we consider that at the onset of this year, gold was trading at 1040, 1050, 1060 in that area, which were extreme lows that we really have not seen in the marketplace at any time since the market traded to 1920. It had to be pre that rally, 2008, 2009, 2010 rally, to actually see prices this low. On the other hand, when we look at the high that we achieved really this year, it does match up, and it matches up historically to the high that we reached last year in 2015. And to do that, we will really need to take a look at a weekly chart, and we'll do that in a second. But before we look at that weekly chart, I do want to look at where I am really fixing our current level of critical support in the market. Now, it's based on a longer term fib study, comes in at about 1244. Let's draw this line across, and as you'll see, this 1244 lines up exactly with this extreme low that we saw in the market yesterday. This number is a 23% retracement, considering the move from the beginning of this year, the end of last year, when it hit these lows at 1045. That's where this starts at, and it takes its conclusion at the top of this rally at about 1305, 1306. When we do that, we look at a 23% retracement, and that comes to this level right here, as I said, at about 1244, the low that we saw this week. If this low can hold, it will allow me to return some optimism in terms of looking for a continuation of this rally that we have seen this year. However, the high that we hit is a foreboding number when we look historically at what we saw last year. In fact, let's go ahead and pull up a weekly chart. And so traders, I've done just that. I've brought up a weekly chart. We typically use this as our big picture, but I have enlarged it a bit. And this is what I find a little bit foreboding. Here is the beginning of 2015. Here is the beginning, of course, of 2000, our current year, 2016. When we look at the price of gold, of course, in 2014, it had been coming down to a low, and then around the last quarter of the year, it began to move up. But when you look at January and February, the highest price gold traded to in 2015 happened to be about 1306. When we carry this over to the recent highs that we had, which are just above that, as you can see, these two tops match. And so what we're seeing is a repeat of what we saw in 2015, in which we had the market go to a new high price, which is what we saw here, which is what we saw in 2015. And in 2015, that turned out to be the highest price of the year because it did nothing but drift lower. Now, whereas gold closed slightly off on the day, silver closing slightly up on the day, Settlement up about 4 cents on the day at $16.51. The low 16.42, the high 16.61. However, it's not really today that has drawn our eye to the silver market. It is what we've seen over the last 3 weeks. This is a weekly chart. Each candle represents a week in trading. We can absolutely see that 3 weeks ago and 4 weeks ago, we had this market top out at 1800. We have had consecutive down weeks now for the third week in a row. We broke below a 61% retracement point at 1663, and the next real level that we want to see, because I believe it could be under more pressure, has got to be the 50% retracement level that comes in at around $16 per ounce, and we can see some historical technical evidence here, it acting as resistance. Also here it acts as resistance, and as we all know, resistance and support are part and parcel of the same thing, depending on whether you're above the line or below the line. U.S. equities markets up ever so slightly today, up about 0.33%, 17,500. That's the Dow Jones Industrial Average. When we look at the Standard & Poor's tracking for the day, that closed dramatically higher, up 11 points at 2050. If you look at the net change of the Standard & Poor's, that's sitting at around 0.55, 0.56, 0.5%. And when we look at the advance in the Dow Jones Industrial Average, that only closed up about a little over 0.33% on the day. But as far as I'm concerned, the real news this week is the fact that this week we broke back below our 50-day moving average. It's this dotted red line, 200-day moving average, solid blue line. But as I said, this week we broke back below that. We have not traded as low as the 200-day moving average, but here's the thing. Now that we are below this 200-day moving average, and we noticed that the high kind of came to but was not able to close above it, but the fact that we are now below our short-term 50-day moving average puts us in this area in which a break below 2000 or 2005, that's the 200-day, that would signal some sort of a potential for a dramatic correction, but a move back above the 50-day moving average would kind of put us back into bullish mode. So we want to see how this market reacts. Is it going to drift lower and drift towards the 200-day, or will it pop back above the 50-day moving average? And that's something we'll see in terms of how this market unfolds next week. My sense is that we'll probably, as I looked for the market to drift lower last week on last week's weekend review, I think we could see a little bit more of that come into play, of course, this week. Now, crude oil did close off on the day almost a full percentage point, 0.85, 47.75, putting it off about 40 cents per barrel. That's on the day. But consider this. When we take a look at the long-term moves in crude oil, and that's what we're looking at, each candle represents 1 month in trading, we can see that at the end of last year, 2015, beginning of this year, this being January, we hit that extreme low at $26. It closed above, $33, then closed above $36, then closed above $44, and is now trading at $47.45. Now, we're more than halfway through the month, but if we look at that, if things continue to move in this fashion, we have seen 4 straight months of oil moving to higher pricing. Dollar in essence unchanged on the day, 95.32, but it is the high that I find noteworthy and interesting, right below 95.50, which is where we're currently looking at potential resistance. But realize that's resistance after seeing this market rise from below 92 on the dollar index to where we are currently. So traders, we are going to enter the weekend with no active trades. We are flat in all markets. In terms of what I'm looking for next week, to me, it's critically important that gold, in terms of pricing, hold this most recent low that sits at around 1244, 1245. We can see that that was the low yesterday. It also matches up to a 23% retracement of the entire rally that we have seen from about 1045 to 1305. And because of that, I hold this as a pretty endearing area. If we see the market find support, I do believe there's still the opportunity to see higher pricing. However, if we breach below this particular price point, we then go into the area that was former support, and we could be looking at lower pricing in gold. However, I am leaning towards the opportunity of finding a good buy opportunity in gold rather than looking to sell it here. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.